So what you've seen in the overnight action in the US is, some gyrations where the Nasdaq sold off big. You had gains in the Dow and S&P that did give up into the end. But broadly, if you see the last couple of weeks, it's been selling in Nasdaq and buying into other sectors, everything from the transports, energy, metals, the Russell, and also banks, financials. So there have been completely different segments that have been outperforming the market pretty much one way, while all this short-term noise has been going on. And some of the noise has to do with different factors. One, of course, is well published, the bond yields. The other is the rising dollar, and it's having an impact on the Nifty as well. So the Nifty is under two pressure points. One is, of course, the dollar itself, and the other, I think, would be to some extent the year end. So there's the seasonal factor where once you come into pressure between Jan and Feb, markets can remain suppressed or even down. You had some of the sharpest sell-offs into this time period between Feb and March, like you saw last year. This year it's not that sharp. You had a post-budget rally, but it's sort of given up, and now we are simply consolidating before we can make another move up. But looks like probably the seasonal effect will be that you keep it pressured down, and keep a watch out for how far down you can really go. And once we are done with the pullback or the consolidation, whichever the case may be, then I think the market typically we should pick up into the month of April. So I think the watching period is the next couple of weeks, 1 to 2 weeks at the most, and then I think we should get a turn for the better. That's my general sense of what is going on. In the meantime, whatever pressures coming from the dollar may also recede as the dollar peaks out. The counter trend bounce, which I've also done a video on last week, should sort of end at some point, and that should also then end the pressure that you're seeing in precious metals. So couple of things to watch out for, and near term, simply need to be careful of the volatility. To some people, selling volatility is a way around this type of range bound market, because you end up eating the premiums. And if you're doing directional trades, then probably most of them are in stock specific and sector opportunities and not in the indices for the time being. That's my overall take. Thank you.